Hello, friends and fellow math geeks. Welcome back to Bitcoin Math. So today we're going to look at the auto purchase calculator. We're going to run through an example of what this is, how it works, and what to pay attention to. So on the home page here, you're going to scroll down to the OPM and strategic financing tab here. You're going to expand that and click on the auto purchase calculator. So to set the stage here, what we're going to do is just kind of look at the big idea. Now, similar to the home purchase and some of the other strategic financing models, what we're really looking at is how you use your cash. Because assets like cars and homes and boats require down payments. And oftentimes people save up their cash because they're excited about their purchase and they put down a lot more money than they might otherwise have to because, well, they don't really know the alternatives and what the long-term impacts of some of those other alternatives might be. And so that's what we're going to look at here is, well, instead of putting down whatever cash you have saved for your car purchase, what if you opted for the 0% down option in exchange for a higher monthly car payment, and you converted your cash into something that might generate a better return, like Bitcoin or even gold or stocks or something else. And so that's what we're going to look at here. Okay? So let's say we found an amazing car that we like, and let's say that car is $50,000. And let's say that we've saved up $10,000 to put as a down payment on that car. Right? That's a 20% down payment. We're super excited. It's our dream car. So of course, we are overrun with emotions and just eager to go out and buy our dream car. And let's say we got this at a clean 5.5% APR, and we're going to assume this is over a 5-year term. Now, in order to model the scenarios here, you also have to select a Bitcoin compound annual growth rate, or CAGR, for the 5-year period. Now, the icons on here will show you Michael Saylor's projections for the next 21 years. This is his bear case, his base case, and his bull case. Now, over a 5-year term, let's go ahead and just hypothetically say we think it's going to be Saylor's bull case, 37%. And then the outputs are produced. So, kind of going down the line here, section by section, in the TradFi scenario, we're going to put your $10,000 down, and therefore we're going to finance the remaining $40,000 of this $50,000 car. In the Bitcoin scenario, we're not going to put down anything. We're going to take our $10,000 cash and we're going to buy Bitcoin with that, and we're going to finance all $50,000 of the car. So this will have some impacts on our debt service, right? So our monthly principal and our monthly interest are going to change each month because these are amortized payments. And if you don't know what that means, I encourage you to chat GPT that. What is amortization in a loan? And it's going to produce a monthly payment. Now, the monthly payment will stay the same, even though through the amortization schedule, the monthly interest and the monthly principal will change. So what you can see here is that in the traditional scenario, your monthly payment is going to be less than in the Bitcoin scenario, and not just a little bit less either. By putting 0 down, you're financing another 20%, so you should expect that your total monthly payment will be, materially larger. And over the course of this 5-year period, you'll see too, you're going to pay more in interest because, well, you're borrowing more money. So over the course of this term, you are saving about $1,500 in interest payments because you financed less using more of your cash. But then come down to the Bitcoin investment scenario. In the TradFi, well, you didn't have any money left. You took all your $10,000 of cash and you put it into the car. But in this scenario, you put all $10,000 into Bitcoin, which at a price of 117,668 or 686 got you 0.08 of a Bitcoin. And at the end of this 5-year term, obviously you have $0 in Bitcoin value here because you didn't buy any. And in this scenario, you have almost $50,000 in Bitcoin value. Now, going down to the depreciation section here, because you converted your money into the asset, in this case a car, well, your asset returned the same value of the, or your money returned the same value of the assets return, which in this case, a car is actually returning a negative value due to depreciation. So after 5 years, you've actually lost a little more than half of your cash down payment. Whereas in the Bitcoin scenario, you actually haven't lost any of your money because, well, you invested all of that into an appreciating asset, not a depreciating asset. So what does that look like at the end of this 5-year term? Well, in the traditional scenario, all you have is the car. It's totally paid off. But because of depreciation, your asset is actually only worth $27,000. Okay? Now, in this scenario, you also have the car, right? But you've got $48,000 in Bitcoin, making your total assets worth over $75K, right? So how does that compare? Well, using these inputs and these metrics, you're getting about a 3x benefit here. Meaning that by using other people's money, financing more of the asset, right? Taking on a larger loan so you can take your cash, your 10 grand that you worked really hard for, and you can get a 37% return on that cash instead of a negative 12.5% return on that cash. Now, obviously this is hypothetical. This is not financial advice. None of this is guaranteed. Bitcoin is volatile, etc. But from a general standpoint, these are principles that I would encourage you to continue learning, understanding, asking people about, because they're important. And this is how a lot of successful people are building wealth. They're using OPM, they're using more strategic financing processes, they're borrowing at low rates to finance things like cars, homes, boats, etc. And they're taking their hard-earned cash and they're allocating to appreciating assets like Bitcoin. So that's it for this one. If you have questions, feel free to leave feedback, drop a comment, let us know how we can make this better. And with that, we'll see you on the next one.